The headlines are full of inflation. Just this morning, we've had yet another surprise inflation reading, with UK prices rising faster than analysts had expected again. And the asset class most readily associated with inflation in most investors' minds, commodities, has put in a blistering performance over the past year. And the question I'm asking myself at the moment is this: has the bull market in commodities topped? Oil says the commodity bull market is still on, but otherwise it certainly feels like it might have. And the last few weeks have seen some pretty violent sell-offs. Lumber, for example, one of the poster boys of the inflation narrative, has fallen in half, literally. And I ask myself, are these corrections marking the end of what was a pretty mighty bull market? Do we sell because the bear is here, or are they simply the slap in the face that bull markets tend to give you to shake you out of your positions? So let's do a quick review and find out. Now, oil is the commodity that's saying bull market most strongly. It's the most important commodity of the lot, and it keeps grinding higher. Higher oil prices mean inflation, even in the modern sense of the world. That is to say, higher prices, not money printing. And inflation in everyday goods and services, not just in asset prices. Both Brent and West Texas Intermediate are now trading above $70 a barrel. We're getting new highs all the time. The last time West Texas was above $70 was 2018, so we're at 3-year highs. Brent, meanwhile, is at 2019 highs, 2-year highs. As far as oil is concerned, the bull market is still on. Where oil goes, other commodities tend to follow. Natural gas, however, has run out of steam, if you'll excuse the dodgy metaphor. It's at its 2020 highs. It looks like it's put in a double top. So that's a point for the bears, not a particularly significant one. Oil is more important. The metals, meanwhile, we look at them and we wince a little. The precious metals have quite definitely turned down. Gold's been making lower lows for 3 weeks now, and its recent rally petered out at the all-important 1920 an ounce mark. And I say all-important because that was the 2011 high that stood for 9 or 10 years. Silver's looking a bit better. It's formed a sort of wedgy, triangular thing, and I maintain my view that if silver can get above 30, it goes to 50. But for now, it can't get above 30. But just to be holding up while other metals are sagging is a sign of relative strength. Platinum, has been drifting lower since April. One day, its time will come again, hopefully in my lifetime. And palladium also has been edging down since May, and it was quite violent sell-off last week. As for base metals, copper, nickel, aluminium and iron ore, they're all headed lower. And this has been the case for over a month now. Nickel since February. Lead and zinc look a bit better. And tin, well, there's no stopping tin. There ain't enough, as the old Cornish miners would say. So in short, silver, lead, zinc, tin, and silver, lead and zinc are all usually mined together. They're all saying consolidation in an ongoing bull market. Gold, copper and all the others, not so convincing. So then if we look at the grains and the softs next, and here too the message is a concerning one for commodity longs. Wheat, corn, oats, rice, soybeans, soybean oil, soybean meal, cotton, palm oil, cocoa. They're all pretty much all of them in downtrends, having peaked a month or so ago at least. Some are worse than others. Cocoa's been in a downtrend since 2020. Sugar, coffee, lean hogs all look a bit better. They've had down weeks, but that's on the back of many weeks of going up. So the message is mixed. It's hardly ringing positivity. Some commodities are in definite downtrends, others are holding up well. But holding up well, that's bear market talk. It's not the stampeding bull market of a couple or 3 months ago. On the other side of the coin to all of these trades, we have the US dollar, which looks like it has put in a low, an almighty W bottom, and is now trending up. Commodities don't receive the same protection as the S&P 500, which is basically America's savings vehicle, or the UK housing market, which is the UK's. Authorities don't really mind if commodity prices fall. If the S&P is booming, it means the economy's doing well. If commodities are booming, it means inflation. The bond market, where yields peaked back in March, also seems to have rejected inflation fears. And I stress this all depends on your definition of inflation. But my hunch is that the US dollar rallies from here and that means a few more months of weakness ahead for commodities. That doesn't detract from the bigger story that metals in particular have suffered years of underinvestment, so there is a genuine shortage. But the speculative money that piled into commodities is nothing like as hot as it was. Now, am I interpreting this right? We got to make our call. But thanks very much for watching. Please subscribe to my channel, and I'll be back with another video very soon.